Are you curious about the difference between buying a home and renting a home? If you are, you've come to the right place. Let's break down the differences between buying and renting right now. All right, so it is important to know that people build wealth in our country through real estate. So when somebody says that, like, what does that really mean? Well, it means that over time, real estate has appreciated, which means that the value of the home or the asset that you've purchased is going up. Now, the amount that it goes up will vary. It's going to vary by what's going on in the real estate market. It's going to vary from area, location, type of dwelling, all those things. But on a general level, we see homes appreciate over time. Even with the Great Recession of 2008, we saw market values on real estate drop. But when you look at it, since then, they have increased and actually exceeded in many areas where that drop was back in that time. So historically, we build wealth through real estate because real estate is an asset and it has increased in price over time. So the question you want to ask if you're looking to purchase a home is, what is the average appreciation rate for this particular neighborhood or this type of dwelling? On average, according to CoreLogic, our country has seen a 6% increase in market values year over year. So last year to this year, 6%. So what does that mean? If you're purchasing a $500,000 house and you had a 6% appreciation rate, that means that your house is now worth $30,000 more. So that's how we build wealth. And then maybe the following year, maybe it drops to 2%. So 2% of the 530. And then you can just see year over year over year that that's where that wealth building actually takes place. Now you may say, well, what if I'm not going to be in the house that long? I think that's a valid question. And it may be, depending on the cost to acquire that home and the average appreciation rate, maybe it makes sense to rent versus buy. So your situation is also going to drive the answer of whether you should buy or rent a home. I've been talking numbers and mortgages for over half of my life. Yeah, that means I started when I was 12. Yeah, no, I didn't. But so this is something that I'm really passionate about, and I love to be able to show, especially first-time home buyers, how it works. So I use a tool called Mortgage Coach, and Mortgage Coach is cool because it allows us to show side-by-side graphs and different loan programs, but it also allows us to show appreciation. The tool allows us to show very clearly what will happen over, let's say, a 5-year period if you continue to rent. So how much money you've paid out of your pocket at a certain rent schedule versus if you purchased a home, how much equity or how much appreciation you've received, thus how much net worth you've built over that 5-year period. So let's kind of dive into this Mortgage Coach. Now this is just an example, but we're using in this scenario a $500,000 purchase price. And you're going to see I've showed a few different financing options here. So everywhere from a 3%, 5%, 20% down, conventional loan, and I even threw in an FHA 3.5% down version in that fourth column. But really what we're going to focus on is the average rent versus the payment on one of these programs. So we're using a rent payment of roughly $23.20 a month, and we're saying that the actual total house payment is about, let's just use column number 3, which is the 20% down conventional loan option. So in that case, that payment is roughly $31.30 a month. And the payment breaks down like this. $296 is paid towards your principal. Kind of think of that as your savings account. So every month when you pay your mortgage payment, part of that goes to your principal, i.e. your equity that you have in the home. And then $28.35 on a 30-year fixed rate in this scenario is how much is going to interest. Now, if you are somebody that wants to pay off that loan fast, keep in mind that you only pay interest as long as you have that loan balance. So let's say that you get a bonus, or let's say that you get an inheritance and you want to come in and do a principal reduction on that loan balance to drop your payment. You potentially can do that with a recast, which makes it really easy. It's low cost and sometimes no cost. And then what will happen in that scenario is the lender will take in that principal balance payment. They will update your loan balance and update your payment schedule for the remaining term to be reflected based on that new principal balance. So lots of options with how much principal you pay, but you control that, and that's really important here. Okay, so as we kind of move through the Mortgage Coach, there's a lot of different analysis here. What I like to focus on is a few things. One, let's go to the rent versus paid in 60 months. So in this scenario, if you are paying rent in 60 months at that amount that I initially indicated, you will have paid $161,832 out of pocket. What? Crazy number there, right? But if you go over and you start to look how much you would have paid out of pocket with your various loan options, you're looking at anywhere from $208,000, $201,000, and even back to our example of the 20% down scenario, $166,000 cash out of pocket over that 5-year period. So you can kind of start to see the differences. But here's the deal. What we have to account for is the real estate value, because again, when you rent, you're paying somebody else's mortgage. When you buy, you're paying your own mortgage, and now you have an asset that very likely will appreciate over time. Now, a lot of people are like, well, what if my house doesn't appreciate? Or what if it depreciates, meaning that maybe, it loses value of 1 to 2 to 3%. Again, we're looking at real estate over time, that appreciation level. So for this purpose, I'm pretty conservative. I'm using a 4% appreciation rate. Now, on the rent versus paid, you can see that that real estate value is now about $608,000 after that 5-year period. Well, in this scenario, you paid $500,000 for the house. So now you have made, just in the real estate appreciation, about $108,000. That's how we build wealth in our country. So I love it. Now, if we go to the net worth in 5 years, this is really just another kind of great example of how these numbers work. Keep in mind, I'm using a 7.6 appreciation rate on the rental payment going up, because we do on average see rents go up. Again, it's going to vary depending on the part of the country, etc. Anywhere from, let's say, call 5 to 8%. So I'm using 7.6 in this scenario. Property depreciation at 4%. And also keep in mind that that tax bracket shows 0%. But if you're in a situation where you are going to itemize and not use the standard deduction when filing your tax return, you may benefit by the mortgage interest paid. Again, only in the itemized approach on your federal income tax. So over time, we are building wealth through real estate. So real estate in many cases is a long game, meaning that, if you're going to buy a house and not be in it for more than a year, I think definitely short term, maybe just rent. But if you know that you're going to be there a couple of years, again, talk with your real estate agents. Real estate agents are so important to this process because they can give us insight into what's gone on in that area, that neighborhood, how much it's appreciated over the last 5 years, what the annual appreciation rate is, what it's tracking at. So get that information, because if you're in this game to build wealth, this is the way you do it, through real estate. And I'm not saying that you can't do it through crypto or the stock market or any other thing, but real estate over time is really how Americans do build wealth in our country. So from a long game, it is definitely a wealth building tool. Are you curious what this might look like for you over the next 5 years? My team can put together a financial analysis just like this for you. There's no obligation, but it would give you an idea of where you stand and how much you're paying in rent and how you could build wealth over time and really what it looks like. Click the link below to schedule a consultation with one of our mortgage advisors, and we'll create a personalized buying versus renting analysis just for you. If you found value in this video, please subscribe and leave a comment with your #1 takeaway. I'm always excited to hear how this information is landing and if it's bringing value. I hope it does.